Let's dive right into today's explainer. We're unpacking a really fascinating, highly debated, and honestly explosive project in the digital asset space right now called MemeCore. Now, this isn't just another internet joke coin you see popping up overnight. It's an ambitious attempt to completely restructure internet culture and build a fully functioning economy around it. We're going to take a totally objective look at the data, the underlying tech, and the on-chain reality of what they are calling Meme 2.0.
To understand why we're even talking about this today, you really just have to wrap your head around this number. By June of 2026, MemeCore hit a staggering $3.87 billion market cap. That puts it right up there in the top 30 of all cryptocurrencies globally. And to put that into a bit of perspective for you, from its initial launch price to its all-time high in April 2026, the native token saw an unbelievable 60x growth.
Which naturally leads us to ask, how exactly did an ecosystem built entirely on the concept of internet memes scale so massively in such a short amount of time? And probably more importantly, when we look past all that hype, what severe risks and centralization concerns are on-chain data analysts warning us about right now?
To truly grasp this whole phenomenon impartially, we're going to follow a quick roadmap. We'll start by defining Meme 2.0, unpack how their proof of meme consensus actually works, explore their expanding ecosystem, follow the money into their tokenomics, and then finally analyze those hidden risks. All right, let's jump right into our first section. Welcome to Meme 2.0, and see what kind of economy they're actually trying to build.
The core definition here is absolutely vital. MemeCore is not just a token living on Ethereum or Solana. It is its own independent Layer 1 blockchain, meaning it's fully compatible with Ethereum apps, but dedicated entirely to this Meme 2.0 philosophy. They want to take memes from being short-lived, highly speculative trends and turn them into a structured, utility-driven economy. It's a system where culture literally intersects with capital in a measurable way. They're basically pitching themselves as a creative studio that actually owns its own blockchain.
And they've moved incredibly fast to execute that vision. Their mainnet only launched in February of 2025. Fast forward to July, and they had already secured major centralized exchange listings on platforms like Kraken and Binance Alpha, bringing in massive retail liquidity. They hit their all-time high price of $4.66 in April 2026. Then, by June 2026, they made a really strategic move, acquiring a South Korean Kosdaq-listed firm. This was a very deliberate play to secure regulatory pathways like ISMS certification right in one of the most active crypto markets in the world. Okay, moving to Section 2, let's talk about proof of meme and how their consensus mechanism actually works under the hood.
What's super interesting here is how MemeCore secures its network. They use a proprietary consensus mechanism that they call proof of meme, or POM. So instead of traditional mining, block rewards are split across three very specific categories. 75% goes directly to people staking the native M token. But here's the real twist. 24% goes to meme token delegators. That means users can take approved, totally separate meme coins, delegate them to validators, and earn rewards. The final 1% just goes to the block proposers themselves.
Think of this whole proof of meme system as a hybrid. It literally ties blockchain consensus directly to meme activity. It's treating community engagement and cultural relevance as a hard, measurable protocol asset. It creates this fascinating loop where the more meme activity happens on the chain, the more rewards are generated. And that incentivizes the network validators to actively support and promote the culture on their network.
Let's head to Section 3 and check out the ecosystem expansion, looking at the actual tools and dApps they've rolled out for their users.
This right here is the economic engine of MemeCore. They use their own token standard called MRC20. When a new meme project launches using this standard, it triggers an automatic three-step process. First, the token launches. Second, a 5% tax is immediately applied to the total initial supply. And third, that 5% gets locked into an on-chain meme vault. This vault then slowly drips those tokens out as rewards to M stakers and meme delegators over 1,000 days. It's an enforced long-term reward mechanism designed to prevent that usual pump and dump cycle we always see with typical meme coins.
And to make all of this happen, they've built out a completely self-contained suite of tools. They've got Memax, which is their decentralized launchpad. There's Pupa, a no-code minting tool so creators without any technical background can just launch their own tokens. They have their own dedicated block explorer called MemeCore Scan, and they've even integrated gaming with Memes.war, which is a Telegram-based play-to-airdrop game. They are dramatically lowering the technical barrier for anyone who wants to create or trade digital culture on their specific chain.
Moving on to Section 4, we need to execute a sharp pivot and follow the money. Let's dig into the tokenomics of the M token.
If you look at their initial token distribution, at first glance it heavily favors the community bucket at a massive 58%. This is meant for airdrops, staking rewards, and ecosystem incentives, which aligns perfectly with their whole community-first narrative. Then you have 15% to the foundation, 13% to core contributors, 12% to investors, and 2% to a treasury. But independent analysts have pointed out a pretty significant caveat here. The exact vesting schedules and cliff terms for that massive 58% community allocation remain largely undisclosed in their official documentation.
And that lack of transparency brings us to a really critical metric, the massive gap between circulating and maximum supply. As of June 2026, the circulating supply of the M token is roughly 1.31 billion. But the maximum hard cap supply is 10 billion tokens. That means the vast majority of tokens have yet to even enter the open market.
This really hammers home the extreme dilution risk facing current holders. While the current market cap sits at an impressive $3.87 billion, the fully diluted valuation, which is what the network would be worth if all 10 billion tokens were circulating today, is a staggering $15.92 billion. That's roughly a 4.1x premium. So for the token price to simply stay exactly where it is today as those locked tokens unlock and flood the market, the network has to generate and maintain incredible, sustained buying demand.
And that leads us directly into our fifth and final section, analyzing the hidden risks, focusing on centralization and opacity. Back in April 2026, the renowned crypto investigator Zach XBT actually publicly challenged the project. He demanded an explanation regarding their token valuation and distribution. His on-chain research pointed out that behind that massive multi-billion-dollar market cap, the actual trading liquidity is quite limited, and insider token concentration appears alarmingly high. Essentially, if just a few large whale wallets decide to sell, the price could experience a catastrophic crash, simply because the market cap is built on a very thin layer of active trading. Furthermore, tokenomics researchers have mapped out some specific centralization vectors built right into the protocol itself. Unlike some major chains that have thousands of nodes, MemeCore's block production is controlled by a set of exactly 7 active validators. And to become one of these validators, you have to self-stake 7 million M tokens. That creates a massive financial barrier to entry, pretty much ensuring only highly capitalized insiders or institutions can actually run the network. Finally, creating that 5% meme vault we talked about earlier, it actually requires an opaque multi-sig approval process. That means a few select insiders hold the keys. It's not just an automatic smart contract execution like you might expect.
And to top it off, the governance structure itself is incredibly opaque. According to their own documentation, the protocol parameters are absolutely not set in stone. The 30 M per block issuance rate, that can be modified via a hard fork. The list of meme coins eligible for that 24% delegation reward, known as the meme whitelist, is fully adjustable by the governance contract. And most surprisingly, proof of meme integration for a project isn't permanent. A coin can literally be removed from the system. This means the rules of the entire economy can be changed dynamically, without any clear decentralized voting constraints visible to the public. So after reviewing the ambitious technology, the incredibly rapid market expansion, and the glaring on-chain risks, it leaves us with a really provocative question to ponder. Is MemeCore successfully engineering the long-term future of digital culture, or is it basically a centralized house of cards just waiting to dilute its retail investors? Will Meme 2.0 actually sustain its multi-billion-dollar promise, or will the weight of its own tokenomics bring the whole thing crashing down? That's all for today's explainer. Keep asking questions and always keep looking at the data.